2030 will be a big milestone between the 2028 cycle and the 2032 cycle, when we will potentially go from 1 million to 5 million. Bitcoin that's done 15x, Tesla that's done about 15x, and MicroStrategy, fully focused on Bitcoin per share increase over time, they've done 30x. You need to be laser eyes focused, either as an individual or as a company, on the accumulation of Bitcoin. You have Bitcoin at 60% annualized returns over 4 years. You have Magnificent 7 at 30%. You have the S&P 15%. And then you go down like real estate 8%, gold, and so on, until zero and even negative effective rates. It is quite impossible for any company to outperform every year Bitcoin, meaning to generate 60% plus return and risk adjusted, compared with Bitcoin, where you don't have any risk of execution. Even if a company does plus 15%, this is nothing in Bitcoin terms. If you do plus 15% but you don't accumulate Bitcoin, well, it's just going to zero. Bitcoin is at the center of capital markets. It is the standard store of value, and it has infiltrated all financial instruments in about 8 to 10 years. This will completely reprice the financial world. It's not a matter of if, but when at this point.
What are you doing and why are you into Bitcoin?
Sure. So I'm Alexandre Laizet. I'm Deputy CEO and Director of Bitcoin Strategy at the Blockchain Group. And previously, I was Digital Assets Lead at Accenture, where I was leading the team for digital assets, notably in France and Benelux, and over the world as well, leading the public blockchain offering strategy for financial institutions. So over this experience and a past one as well at EY, where I worked with a lot of multinational corporations and treasurers, I've been working with 30 plus financial institutions and half of the 40 biggest corporate treasuries in France. So that's also what led me to Bitcoin, because I was working with these corporate treasurers back in 2020 in the middle of negative interest rates context, where I was seeing billions and billions of shareholder value being evaporated, let's say, in money market funds and so on. And at the same time, you had MicroStrategy launching the Bitcoin strategy and starting to go through the roof. So Bitcoin, I'm Bitcoin class 2020, let's say. And so I've gone down the rabbit hole as everybody in the Bitcoin space. And then I discovered that the best opportunity was to work on a Bitcoin treasury company and develop one. So when I was digital assets lead at Accenture, I was contacted by the blockchain group to implement and launch a Bitcoin treasury strategy. So of course I said yes.
A Bitcoin treasury for their own company.
Exactly. So the blockchain group is the first Bitcoin treasury company in France and Europe, fully focused on the treasury side on improving Bitcoin per share over time. So that's the full focus of this Bitcoin treasury company strategy. And the company is listed on Euronext Growth Paris, where it trades in the public market. So it's the first publicly traded company in France to adopt this Bitcoin treasury company strategy, like the MicroStrategy playbook, fully focused on raising capital, accumulating Bitcoin on the balance sheet, holding it with no intention to sell. And so the objective is, of course, to raise as much capital as possible, to buy as much Bitcoin as possible, because we believe it's the best store of value. So, yeah.
Interesting. And the blockchain group, what are you doing?
Yes, so the blockchain group, basically, and the name comes from an activity that they had before. They had a subsidiary specialized in Web3 wallets. That activity failed. Basically, it didn't survive the last bear market. So that's also part of the reasons why I joined as a Bitcoin maximalist, the blockchain group, was because now, after liquidating this subsidiary, the blockchain group has two operating companies. One dedicated to data intelligence and AI consulting services, and another one dedicated to specific development tailored for web applications. and also a part of the activity in blockchain development when there is a business use case and client demand. But then, of course, we have these two operating companies and now the Bitcoin Treasury strategy that we have launched on 5 November last year.
Interesting. So a completely new thing. But it seems like the blockchain group has no operating companies right now in the crypto sphere direct.
So what we have is we have blockchain developers that do provide services for clients that want to develop any type of application that would use any type of uh, blockchain network to do automation or something like that. So that we still have, but we don't have a specific subsidiary as before that is dedicated to other activities like that.
Really cool. I love that. I think that's a great space to be in. And you mentioned Bitcoin per share. We had that like two times, I think, already on the podcast. But think most people still is that like a little bit of a foreign concept of like what is Bitcoin per share, and how will that move forward? Like how will this shape companies, how they operate moving forward?
Yes, so this is the new metric that Bitcoiners look at when valuating, especially a publicly listed company, but also private entities. It's when you divide the number of Bitcoin by the number of shares, and so you see how much you have Bitcoin per share, and this is the number of the metric that you look at for valuing the company. And so as much this number can go up is the value that you can get as well as an investor. So as a Bitcoin investor, you will want to look at companies, publicly listed companies that are able to accumulate Bitcoin with their excess cash from their operations and that are able to raise capital, both equity and debt, especially convertible debt, to increase more the number of Bitcoin per share than the dilution that you get when you raise equity, for example, or where you convert the convertible bond. So the increase of Bitcoin per share, you see that is something that is published by MicroStrategy as BTC yield. It's not really a yield, it's like a KPI that is published by the company to say, look, we have raised that much capital, and with this capital, we have acquired this much Bitcoin. And so with this much Bitcoin, it's been increasing more the number of Bitcoin than it's been diluting the shares. So there is an increase in Bitcoin per share. And the calculation is typically done on a fully diluted basis. So you take into account all the shares that will be issued over time that you can know of. And you take into account the Bitcoin that you have on the balance sheet. And with that, you can calculate the BTC per share over time, over a quarter, over a year. And that's a key metric for investors to see how they performed compared with Bitcoin only, compared with an ETF, and so on. So, of course, a Bitcoin treasury company has many advantages. One of them is first that there is operational activities that you can leverage to generate excess cash flows. You can also acquire new companies to generate even more cash flows on this front. But the key performance indicator for Bitcoin treasury companies is the ability to really focus on Bitcoin. There is a huge difference between companies that accumulate Bitcoin and companies that are fully focused on increasing Bitcoin per share over time. For example, Tesla, they have Bitcoin on the balance sheet, but they are not laser eyes focused on Bitcoin per share increase over time. And in over 5 years, you have Bitcoin that's done 15x, Tesla that's done about 15x, and MicroStrategy fully focused on Bitcoin per share increase over time. They've done 30x. So of course it's volatile. That's numbers from December, but even today, I think it's like 10x, 10x, and for MicroStrategy 20, 23x. So you see that there is huge value in focusing on the treasury side on the Bitcoin per share increase. And then with this, you can provide investors with a Bitcoin yield as a KPI, not a specific yield, that provides more risk to investors because they invest in an operating company, but that potentially can provide more upside as well, as they get more Bitcoin per share relatively, rather than buy an ETF where there will be just one-to-one.
That's interesting. The share outstanding and diluted shares, maybe you can explain it a little bit for those people that don't know about the stock market, because I think it's super interesting to know where this number actually comes from. So you go ahead and there's like shares outstanding. How are the shares actually divided? Like what is the metric there? And there's also like a lot of stock splits and complex things that come into that account. But maybe to make it a little bit more understandable what the shares part of that is.
Yeah, sure. So imagine that you have 100 Bitcoin on the balance sheet and you have 100 shares. Well, you will have 1 Bitcoin per share, you see. So if the company does another raise and it manages to accumulate 200 Bitcoin, but the number of shares only increases by 50, you see that there will be more Bitcoin per share, effectively. So that's, of course, a very rough example, but that's the idea around it. And then, and so to give you an example, for a company that starts the Bitcoin Treasury company strategy, it is much easier to increase proportionally the number of Bitcoins than the number of outstanding shares. Imagine you have 1 million shares and 1 Bitcoin. You can increase the shares by 50%, but then the number of Bitcoin might increase by 2x, you see. So that's why then you have an increase of the Bitcoin per share. And then in terms of how to calculate the fully diluted, it will of course vary depending on the jurisdictions and so on. But an easy example, just to understand, would be, for example, that when you have convertible debt, if you issue equity, that's increasing directly the number of shares, right? But if you issue convertible debt, that is a debt instrument that will be potentially, under certain conditions, converted, paid for into shares. And so in the calculation, you can already take into account those potential shares that will be issued in a future state, to take into account the effective Bitcoin per share, taking into account even the future shares that would be issued later on.
Interesting. And that number is comparable, obviously, for one company, but can you also compare two companies with each other? Like, for example, Tesla and MicroStrategy with that in a good way, or is there too many differences there?
So, of course, there are a lot of differences because for a company that is much more advanced in their Bitcoin treasury strategy, it will be theoretically more difficult to increase the number of Bitcoin per share. Yet, even if MicroStrategy is very advanced, I think they have achieved recently like 90%, 97% BTC yield. So, because they've been able to raise a lot of capital during the last months. So, basically, you can compare company based on the Bitcoin per share increase, but it's not the only factor. There is the number of Bitcoin on the balance sheet. There is the number of Bitcoin on the balance sheet compared with the operating business. There is the number of Bitcoin increase over time with the number of Bitcoin per share. But there is also the multiple of valuation on top of the net asset value that investors attribute to a company. Even in traditional markets, investors will value Amazon, Apple, and so on based on future potential profits that will come. So they will put a multiple on the revenues and on the profitability of the company and say, look, this company is worth 10x their profits, and this company is worth 20x their profits, or something like that. With Bitcoin, it's a bit starting as well. and you have multiples for MicroStrategy that have oscillated between 2 and 3, between the net asset value of the Bitcoin on the balance sheet and the market cap. So you've had these multiples that have been observed, and then you have seen, for example, with Metaplanet, multiples of 5 to 7x, because they've been in their first year and they've outperformed very well. So you see, and it will vary depending on the markets as well, because in the US, when you have a high multiple compared with the net asset value, the companies are incentivized to do what we call an ATM, meaning that they can sell shares directly into the market to take advantage of this multiple, buy Bitcoin with the proceeds, and then potentially then increase the net asset value, and then in the future state where Bitcoin appreciates in value, go back to this market cap at the time. So that's why Michael Saylor says, with an arbitrage, we've captured 500 million of US dollars of value, or even more billions. So that's something that is very easy in the US. It's a bit more complicated in other jurisdictions, like in Japan, because and like in France as well, companies need to convocate a general assembly and say how much shares they will issue and so on, and it takes more time. But at the end of the day, it's also beneficial in other ways, because as an investor, you see that you can also benefit from potentially higher multiples over certain periods of time. So there are a lot of factors to evaluate Bitcoin treasury companies. And over time, you might expect that this will even continue to complexify, because Bitcoin treasury companies will potentially engage in more activities that will enable them to increase their Bitcoin per share over time, in the context that it respects the core principles of keeping the Bitcoin safe and not selling it, of course.
That's super interesting. Also, it's interesting for me to see how those Bitcoin metrics could in the future impact how investors buy into companies. For example, I find it really hard to invest now in any companies that don't have a Bitcoin strategy. It was like, I will not do it. You need a solid Bitcoin strategy. Right now, I'm not investing in any companies, but even if I wanted to invest in, I only look at companies that have a Bitcoin strategy. Otherwise, how can I believe in the management team if they don't have a Bitcoin strategy?
Yes.
Also, then the Bitcoin per share, and especially the yield aspect also of it, which isn't the yield, but the increase of the Bitcoin per share. It's super interesting because because I'm coming from the investment side of things, I know how important earnings per share is and the PE ratios of that, and how prominent they're always displayed also for the companies and the multiples that go with that. Could Bitcoin per share be even like a more important number in the future? Maybe you can also give us some insights of like how the traditional financial space looks at that. Is that just something that now Bitcoiners are looking at, or is that something that maybe is already looked at by traditional financial market and they're like, that could be something interesting, or are we still too much in the bubble?
So I see 3 questions there. The first one, I think, is how does an investment in Bitcoin compares with an investment in traditional companies? How to value a company now in the Bitcoin world that we start to live in, and what is the future state? So on your first question of the how to compare the investment and why even bother with companies instead of Bitcoin directly, I would say that that's the power of focus. You need to be laser eyes focused, either as an individual or as a company, on the accumulation of Bitcoin as a long-term store of value, because it is simply the best store of value, not only the best digital store of value, but the best store of value and the end of the story. Michael Saylor has this famous chart where he says, look, you have Bitcoin at 60% annualized returns over 4 years. You have Magnificent 7 at 30%. You have the S&P 15%. And then you go down like real estate 8%, gold, and so on, until zero and even negative effective rates when you go on money market funds that deliver up to 3% when the effective cost of capital is about 10%. So effectively, it is quite impossible for any company to outperform every year Bitcoin, meaning to generate 60% plus return and risk adjusted, compared with Bitcoin, where you don't have any risk of execution, except if Bitcoin is not anymore decentralized and secure, which is a probability that I would rate at minus 0.01%. It exists, but everyone should do its own research. So that's the risk that you take with Bitcoin. And this risk, you can study it and you can go as down as you want in the rabbit hole and follow us Bitcoiners. But in this context of the best store of value, because it's the only asset that provides absolute scarcity for an individual or for a company, and in a world of monetary expansion and debt expansion and so on, in a credit-based system, you have the formula is the infinity divided by 21 million, right? So basically, in terms of comparing investments or with other companies, it's almost impossible to find another investment that would be best than Bitcoin. The only exception, potentially, risk adjusted, would be Bitcoin treasury companies, because what is better in terms of returns, potential returns, than Bitcoin is Bitcoin is more Bitcoin, right? That's what Michael Seyr says. And effectively, if a Bitcoin treasury company is able to provide intelligent leverage with long-term convertible debt, then effectively you have MicroStrategy that is a 2x Bitcoin with the risk as an investor that you take of an operation, of a discretionary strategy from the board and so on. So effectively, a company that, one, doesn't have Bitcoin on the balance sheet, and two, is not a Bitcoin treasury company, I don't see the investment case, you see. So that's why I'm leading a Bitcoin treasury company in France, because I believe that this is the only strategy that can potentially provide more returns over time than Bitcoin itself, because it is based and leveraged upon Bitcoin. That is the core strategy, right? So I believe that many companies will realize that, and over time you will have 50%, 70% of publicly traded companies that will have at least a portion of their balance sheet on Bitcoin. But this will take 10 years. And that's why also Bitcoin treasury companies have a lot of opportunities, because now you have 85% of systemic banks in Europe and America that have opened access to Bitcoin through the ETFs and other investments. And on the other side, you have corporates that less than 5% are considering adding Bitcoin to their balance sheet. So we are extremely early. And per se, the strategy of a Bitcoin treasury strategy is the winning one, meaning that you are capitalizing on the best store of value that has a gigantic potential for the next 5 to 10 years in and of itself, because then Bitcoin treasury companies will potentially become the most capitalized companies in the world. And then at some point where Bitcoin is mainstream for corporate finance, then these companies will be the best placed to do other things, potentially, to accumulate more Bitcoin, because at this point, potentially, the only way to get more Bitcoin is to provide a product and a service to receive Bitcoin in a counterpart, So, but that's a very long future. So that's for your first question. And the second one, how to value traditional companies. Well, I had this conversation with someone, and he was saying, look, the company can be worth 7x the profitability of any given year. And I said, yes, but this is in fiat terms. In Bitcoin terms, this cash in 7 years is worth nothing, you see. So in a context where Bitcoin goes from 100K to 1 million, because this would only mean that Bitcoin reaches digital gold equivalent, like the 20 trillion market cap that we are at 2 trillion now. In this context, you take 1 million of cash today, this will be worth 100K in 4 to 8 years, you see. So how to value traditional companies? Well, the answer is if this company is not adding Bitcoin to its balance sheet with its excess cash, this company is going to the ground as a stablecoin. And that's the future of any company that doesn't acquire Bitcoin. And that's why, as a Bitcoin treasury company, in just 2 months, we have outperformed the CAC 40 of the 40 biggest companies in France by 120, 130%. If you take 6 months chart, you see that we are flat with them during the first 4 months. Then we adopt a Bitcoin strategy. We go to the roof and they stayed completely flat. Because even if a company does plus 15%, this is nothing in Bitcoin terms. If you do plus 15%, but you don't accumulate Bitcoin, well, it's just going to zero. So on how to value traditional companies, the answer is it's a function of their Bitcoin strategy on the treasury side. You can no longer provide shareholder value if you don't have an appropriate Bitcoin treasury strategy. And then on your third question, if I remember correctly, on the future outlook, I would say that people are not ready for Bitcoin capital markets. We are going into a world where Bitcoin is at the center of capital markets. It is the standard store of value, and it has infiltrated all financial instruments in about 8 to 10 years. So it's starting today with convertible debt. It's starting today with preferred stocks, with what MicroStrategy is doing, and it will infiltrate any financial instrument. As a debt issuer, as a financial institution, if you provide debt to a company, you will want to have a portion of Bitcoin either as a collateral or as a part of the allocation of the capital, because this secures a lot the strategy, because you have at least a very strong component of store of value in the financial instrument. So in a future state, you will also have Bitcoin that will be exchanged directly between Bitcoin and tokenized securities. You already have that with Stoker in Luxembourg using Liquid, the sidechain of Bitcoin, that is tokenizing, for example, MicroStrategy shares. So you can already exchange Bitcoin with MicroStrategy shares and over the weekend. So we'll have a 24/7, 365 capital markets built on Bitcoin. And what do you think Bitcoin treasury companies will be worth at that time?
Yeah, it feels like all the things I hear is like the next 5 to 10 years, there's a massive opportunity where it's so obvious where the future of capital markets and Bitcoin are going, but 96.5% of the population is unaware of it. Yes. And they will figure it out over the next 10 years, or not figure it out, but it's so obvious that they will move in that direction. And Bitcoin will be so obvious that every CFO has to deal with that, where in every board discussion, it will be a part of the story. So it's like a short window of time where the risk of Bitcoin is so low and the potential is still so high that it's crazy for me. Because if you look back, if you could say like, oh, the opportunity was so much bigger in 2012. But yeah, you couldn't like, I respect the people that bought in Bitcoin in 2012 and already saw the things happening now. Because 2012, there were a lot of questions open. The block says war didn't happen. There is no publicly traded company in there. No politicians talks about that. Not even talk about the president, but no nameful politicians talks about it. Like there's nothing you could see in 2012 of all the things that happened right now, just 12 years later. where it's like now it's kind of obvious in what direction we are moving. We have all the puzzle pieces into place. We're just seeing how the game goes, and the next 10 years will be very good for the world, I think, and for Bitcoin, I think. So, sorry for my small rant, but I think
No, that's
really
fully
interesting
aligned.
how big of the rant is it.
Basically, what you have, and Jeff Booth just published a great interview on this with Natalie Brunel, I think, on how Bitcoin is basically like the first, like the first free market that you have that is entering the first global free market that is entering manipulated market where supply is being of course manipulated, and basically this will reprise the world. And the normal order of markets is deflationary. That's the big argument of Jeff, because basically you gain productivity, and everyone is looking to improve services and products and gain competitive advantage and so on. So in its natural state, the world should be deflationary. And it's not only because of the credit-based system that is absorbing and even more creating inflation. So you have Bitcoin, this global free market that is now entering the traditional financial world, and this will completely reprice the financial world. And as we were saying, like how this impacts the valuation of traditional companies, well, this will impact the valuation and the pricing of any financial instrument. And financial institutions will organize around Bitcoin as we all do. So basically, then the trade-off we are making, because we don't have a choice, is Bitcoin is for everyone. So Bitcoin will also be and is already for financial institutions. And so it's also important to keep in mind like the development of peer-to-peer technology and freedom technologies like Nostr and so on, to make sure that as at the same time that we develop the institutional side, we still keep in mind the primary objective, right, of peer-to-peer cash. Even if Bitcoin is primarily a store of value asset, you don't have a store of value if you cannot exchange it, right? So the globally exchangeable part is as much important as the store of value part. Yet the KPI and the key success factor for Bitcoin remains and will always be the 21 million. So any proposition that would go against the robustness and the optimization for the store of value will likely fail. And I think that the innovation around Bitcoin will come from applications and layers around the Bitcoin itself to preserve the most important thing, which is the non-manipulated store of value use case that we have with the 21 million, which is the most important.
100%. That's the hardcore. If that falls apart, everything else is kind of irrelevant, I think. How big of a shockwave is MicroStrategy in the traditional financial space? What do you hear from like other companies that aren't Bitcoin and they don't have Bitcoin Treasury that also notice now how MicroStrategy is kind of sending that huge shockwave into the digital financial space? I don't know if it's still true today, but the last time I checked, it even outperformed Nvidia and most of the other S&P 500 companies since they adopted the Bitcoin standard. I mean, that has to be something every CEO and CFO has to look at. Like that should not be unnoticed.
Yeah, exactly. Well, as I mentioned before, when I was at Accenture and I was working with these 30 plus financial institutions, and from my past experience with the corporate treasurers, what I can say is that you are not above 5% of publicly traded companies today that are thinking about a Bitcoin treasury strategy. Yet we went from about 0 to about 2, 3 even potentially 5%. So the growth is real, but we are extremely early. And what we have and what we will need to go from a state of 5%, considering it, to a state of 10%, 15%, 20%, considering it, is if you have a massive multinational corporation that does it, like Microsoft or Amazon or Apple, this type of companies. We are thinking about Meta, this type of companies that are more mainstream. And the more traditional company, the more impact it will have, or the more adopted already companies by traditional investors, the more impact it will have. Basically, the corporate treasurers need their BlackRock moment for financial institutions. You see, corporate treasurers are still at the moment for Bitcoin than were banks before BlackRock launched the ETFs, basically. So you need this BlackRock moment, but for corporate treasurers, with not only a corporate that says, okay, I will put 2%, but a huge corporate multinational that says, that was before a skeptic that now becomes a full Bitcoin maximalist, like Michael Saylor, or at least that promotes Bitcoin and Bitcoin only, right? So there is a need for this. Yet, even without this, during this cycle, it's potentially that it will happen this cycle. But even without this, you will see already a wave, and we are already seeing it, like every week or even a few days. Every few days, you see a new publicly traded company that announces having bought Bitcoin for their treasury strategy. So now, what piece of thought that I would have for corporate treasurers that are thinking about this strategy is to not make the mistake of thinking that this is an insurance policy for the future of fiat. If you consider it as an insurance policy and you only buy like 2% of your long-term capital Bitcoin with Bitcoin, you are committing a huge mistake, because the example I give is, if you have 100 units of capital and you have the choice between Zimbabwe currency and the USD, will you put 95% of your capital in the Zimbabwe currency and say that 5% is an insurance policy with the US dollar? No, you will put as much as possible in the US dollar. Well, when you have a choice between the local currency and Bitcoin, meaning negative effective rate of return annually and 40 to 60% effective rate of return over 4 years, well, you put as much as possible of your long-term capital treasury into Bitcoin, and not just like a 2% allocation. If not, what are you doing with the 98%? You are wasting shareholder value if you are not allocating as much long-term capital to Bitcoin as possible.
I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece, and make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I guess you already bought some Bitcoin. And now the most important step is to keep the Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the BitBox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still the Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your BitBox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really, really wrong. And through all those steps, the Bitcoin way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty.
Love that. So basically also what you're saying is for the massive influx of money from corporations, we need a big moment. So basically I prepared while you were talking that website quickly. So basically we need one of the really big guys like a Microsoft, like a Meta Planet. I mean, Tesla has, I think, like
you already have Tesla, right?
9,000 Bitcoin, but I think they are not bullish enough on it and they're not vocal enough on it, I guess. And if we have like one of those who have like a substantial amount of money, like, I don't know, Google saying, oh, like 10% of our assets go into Bitcoin or something like that, that you're saying that it would completely trigger that whole adoption.
Yes, exactly. And people are, aside from this, people are completely sleeping on the fact that the US wants to build a Bitcoin strategic reserve. It's crazy to see, right? Because you would think that if the number one country in the world is planning to build a Bitcoin strategic reserve, people would change their mind a little bit, or at least have the curiosity to investigate a bit more Bitcoin. And yet everyone is lost in their day-to-day activities and they don't take the time to understand Bitcoin. But I'm confident that the number of people that take the time is increasing over time, and that we are reaching a tipping point as well. I think it's extremely positive what we can see. We see the number of Bitcoin treasuries for public companies increasing every day. Bitcoin treasury companies that have started their strategy are also increasing the number of Bitcoin they accumulate. And at some point, the time works for us because Bitcoin is doing its thing, it's being adopted, and then you get the Bitcoin at the price that you deserve. So effectively, it's a meritocracy where the strongest that you study Bitcoin, the strongest you understand it, and the more you can prepare yourself, your company, your family, etc.
Absolutely. Do you think that there's an executive order coming so that Trump is not waiting for the bill to pass and giving the competitive edge to him and America with an executive order? I see more talks around that.
Yeah, well, no one will know until the effective date that it's signed, of course. But at least he said very precisely that they will not sell the Bitcoin. I think the probability that I've heard is extremely high, that there is at least like a strategic stockpile where you don't sell and you at least transfer part of the Bitcoin, because part of it is from Bitfinex coins. So it's not all of it, but the probability is quite high as well that you see a moderate purchase of Bitcoin. That's a probability. Basically, it's not a matter of if, but when at this point, because even if it's not made at length during this 4-year period, you can imagine that Bitcoiners will increase over time in the world, and so the Bitcoin strategic reserve will happen anyway. But I would have said that maybe before the election of Donald Trump, but now with the election of Donald Trump and the fantastic team of Bitcoiners that are around it, it's extremely probable that this Bitcoin strategic reserve happens fast and with Bitcoin purchases, and not only keeping the Bitcoin that they have. It's just that for the purchase, it might take a bit more time than people expect, because it's the US. It's it's there is a separation of power and so on, and you want to have a public debate about it potentially. So it might take a bit of time, but I think the time is now to do it. And effectively, if you have another major country in the world that does it before, in any case, it will only accelerate the need to have more Bitcoin for any country. So the probability is very high.
It's so crazy to see nation state game theory playing out in front of our eyes. It's just like, it's crazy that what time we are living in. And when I came into Bitcoin like 4.5 years ago, something like that, that was so far away. It seems like that's crazy that
Yes.
The United States does that. One interesting question I have, we have altcoins and we have Bitcoins, and in the past, in the bull cycle, a lot of the talk was always like, oh, like you should get into some altcoins to have a faster horse on Bitcoin and get more Bitcoin with that. I was always very against that. I was always like, oh, like, why buy some other thing that might get you more Bitcoin or might lose you everything? Like, that seems risky, and Bitcoin already is such a fast horse. And now this cycle, there's a new thing coming along. This is this Bitcoin Treasury companies like MicroStrategy, who are kind of a faster horse to Bitcoin. Is MicroStrategy and soon others stealing kind of the thunder of altcoins, of like that narrative of like, oh, if you want a faster Bitcoin horse, you don't go with, I don't know, Cardano, but you go with MicroStrategy. Not saying that MicroStrategy is an altcoin, but the appreciation of it is faster than Bitcoin, because they not only can stack Bitcoin, they can leverage Bitcoin, and they also can have revenue on top of it.
So I would like to give a shout out to Sam Callahan, because before the ETF was approved, he was in an interview and he said he predicted that there would be no, like, let's say, altcoin season this time, and that the inflows for Bitcoin would be so massive that it would take all the capital, basically. And when I was working with banks at the time, they were realizing the same. They were realizing that the inflows and the demand for Bitcoin was so huge, and it was coming out of the crypto asset ecosystem. It was coming from traditional finance. And so while the altcoin market was like a closed loop, like you took gains from this token to put them in another one, and then recycle them in another one, and stake and restake and so on. And I used to say, look, you can focus all of your time in these small strategies that one of them will win and then 9 of them will fail. And at the end of all of this energy spent on all of this closed loop ecosystem that serves its own purpose, you will not allocate the time necessary to understand Bitcoin and to focus on Bitcoin and to allocate to Bitcoin in size. I think people don't understand the power of focus and the power of the size of the allocation of capital, because it's not the same to allocate 1 unit to casino than to allocate 100 units to something that provides you with 40 to 60% annualized returns based on historical performance. It's not the same. So based only on this, I would say that the type of flows into Bitcoin are completely different from any altcoin market. I mean, at this point, I think everyone has realized, if not, let's study, I guess. Everyone has realized that over blockchains and so on can be interesting for like business applications from the technology perspective, not for their coin or token. but sometimes some company will find an interesting way to apply it. And even with this, many times, like the only technology that has really been used is stablecoins, So, and even stablecoin at some point they will be on a Bitcoin layer. So it's only a matter of time. So on this, I fully agree that like the focus and the message is like even if you find a faster horse on the short term, you are losing your time and you are wasting your capital because the attention that you lose and the power of the capital that you can allocate to the winner is so important that you are making a mistake. Then on your question on the MicroStrategy side, I would say that it's completely different because it's fully based on Bitcoin. It would be extremely different if MicroStrategy was using the Bitcoin for specific things and it was trying to make like sophisticated strategies and trying to generate a yield and this kind of things. They are not. They are keeping their Bitcoin in cold storage and they are accumulating as much of it as possible. So in terms of the difference, I think it's huge. I think it's not even comparable. Yet there is risk in investing in a security, which is MicroStrategy and Blockchain Group and MetaPlanet. Those are securities. And so there are more risks. There are thousands of risks from the country risk, from the operational risk, and so on. Like you have many risks, but more risk, more return potential as well. In the base that the strategy is based on top of Bitcoin, and so as long as the strategy is based on Bitcoin, I think it's quite reasonable to assume that with intelligent leverage, you could potentially have a better return potential than Bitcoin only, let's say. But even this, I would say, is not the right comparison. I would say that Bitcoin directly is not completely comparable to a Bitcoin treasury company because a Bitcoin treasury company is an operating company. So the best comparison is between stocks of companies. How do you compare a Bitcoin treasury company with another one? And can the annualized returns of a Bitcoin treasury company completely outperform a portfolio made of traditional companies that don't have Bitcoin on the balance sheet?
Interesting. How long do you think it takes them to figure that out, all the big companies? You mentioned before 10 years. Is that a time frame you're looking at that where like most of the big corporations at least have some sort of Bitcoin strategy? Don't have to be all in like MicroStrategy, but like at least like 5-10%, there's a substantial amount. Is that like 10 years and time frame you're looking at?
I would say that there are tipping points, like in the theory of adoption of technology, the S curves. When you reach between 13-20% of adoption, you reach a tipping point where it just goes mainstream. Then it goes to escape velocity. It goes too fast. The adoption is very fast. But we are very close to it from the financial perspective, from the financial institutions perspective, and that's why we see so much inflows and historical success in the Bitcoin ETFs, because you have like 20% of the population that have from a short distance or long distance touched Bitcoin in some way. So that's why we are reaching this tipping point right now, and that's why we see so much demand and so much things happening. On the corporate side, we might be one cycle away from this. So it might go faster, but I would think that we could go from 5% considering it to 5% doing it and 15% considering it or 20% considering it by the end of this cycle or the beginning of next one, and that we reach this tipping point by the beginning of next Bitcoin cycle, if there are still cycles, of course, but based on the halving. I would say that overall, both for institutional adoption and for corporate adoption and for Bitcoin overall, I would say that 2030 will be a big milestone. I would say before, of course, 2028, 2029, but around this, I think will be a huge milestone because it will be between the 2028 cycle and the 2032 cycle. And that's when we will potentially go from 1 million to 5 million Bitcoin, so or in today's dollars, right? So it could be even higher, of course, depending on where we are. So at these levels, we could assume. Of course, it's not 100% certain, but we could assume that corporate adoption would be far way advanced than what it is today.
Absolutely, I 100% agree with that. We often talk on the podcast of the impact that Bitcoin has on society, the impact that Bitcoin has on the individual, how it changes the time preference. How is that for big corporations? Like, how does Bitcoin change corporations outside of they have more money, they are more successful? Is there any other impacts that you think an organization change by just having Bitcoin standard?
Yeah, absolutely. Well, it's like on an individual level, every spending is comparable to spending Bitcoin, because the money you spend on other things, even if it's spending in fiat, it's Bitcoin that you don't buy, right? So basically you have a different cost of capital. The cost of capital today is around 10%. Basically, you could say it's the S&P 500. Like if you wouldn't use your money and you would put it on the S&P 500, you would get 10 to 15% potentially if you compare with financial performance, historical performance. So the cost of capital for a Bitcoin-focused company, an operational company, is the annualized return potential of Bitcoin. Any money, any investment that wouldn't return this potential is potentially money wasted. So that's a huge thing to say. Then there are, of course, exceptions to this, because as in our individual life, there is, I think, and I believe strongly, only one thing that is most important than buying Bitcoin is to invest in oneself. It can be like investing in traveling to learn a new country, investing in learning new skills, learning new things, and growing as a family and so on. I think this is why we live as humans. So as a company, it can also be the same potentially. Investing in oneself potentially can provide higher long-term returns than Bitcoin per se. But it's much more calculated when you are on a Bitcoin standard and much more conscious in terms of the trade-off that you are making. It should really be an investment. It cannot be just spending money like this, So, and in terms of focus of the time, that's also extremely important because then as time goes, a lot of the focus goes to Bitcoin today, of course, because the annualized returns are extremely high compared with operational activities. But you could assume that in 4 years, 8 years, there would be a lot of Bitcoin operational activities that will also generate a lot of potential revenue over time. So I would say that for an operational company, and that's what Metaplanet is starting to do as well. They have started Bitcoin Magazine Japan, and shout out to them. It's quite interesting. They are developing a Bitcoin-related business. So at the end of the day, the next logical thing for a Bitcoin Treasury company to do might, in fact, be to develop Bitcoin-related businesses to complement their existing operational business or to extend it. So that's something very interesting that we see at Metaplanet, something very interesting that Michael Saylor had been developing as well before, like a Lightning solution and an Orange check solution. So this will develop over time, but it takes time. And over time, as in traditional markets, you might see a lot of M&A activity as well happening between Bitcoin companies or between Bitcoin and non-Bitcoin companies to grow. That's something that you see in traditional markets. So you could potentially see in Bitcoin land. You see, so basically anything that you see in traditional markets, I think, will happen over time on top of Bitcoin, because traditional markets are being built on top of Bitcoin.
And I love that. And there's so much more to get into.
Yeah.
We're already the 1 hour mark. I love that. And to keep it like that, and maybe we'll do a second round extending. One question I ask each and every one of my guests is, what can we learn from you besides Bitcoin?
Oh, besides Bitcoin, well, I live in Paris and I love the city. And I hope that we will build something that will be huge for Bitcoin and for the adoption of Bitcoin in a continent, Europe, that is full of history and full of great food and culture. And I hope that we will work not only on Bitcoin, but on developing the financial activity and freedom in Europe through the Bitcoin lens as well.
Yeah, I was already, I think, 3 or 4 times in Paris. It's a great city. I love it. I was even there for a shitcoin conference once. What was it called? It was huge. It was so huge. I forgot how it was called, but it was definitely a shitcoin conference. But it was fun. See there
Yeah.
and grab some food and be in the city also.
Well, the food is quite impressive. The quality of life in this sense has nothing to do with anything else in the world, maybe except Italy and other European countries. Of course, you pay more tax, but yeah, the quality of the food and the life is quite impressive. And so I can see a future where we have more freedom, economic freedom, especially, and where you can have the quality of life plus the financial expansion that you can get on a Bitcoin standard.
Very nice. I really do hope that we have an end routine in the podcast where the previous guest is asking a question from next guest without knowing who the next guest actually is. The question is an interesting one. What was your thought process looking like when you were against Bitcoin, if that was the case, and how did that change that? So, like how most people start as critics. How was that for you?
So I've never been against Bitcoin. I've always been a technology positive person, very looking forward in terms of the application of new technologies. But the first thought that I had was that Bitcoin was like level 1 technology, and then you had Ethereum, level 2, like innovation in a traditional Web 2 sense, like in terms of innovating the technology. And I didn't see the store of value purpose, and especially the censorship resistance at the time. I think it was like 2016. So I didn't see that at the time, and in fact, it was a good thing that I didn't have money at this time to not get invested in other things. So it was back in 2020 during COVID that I realized that I had no freedom left, not even the right to go out of the home and do 1 kilometer away in Paris. That I realized that I desperately needed something, a tool to regain my financial sovereignty, because without financial sovereignty, you are very far from freedom at all. So that's where I discovered the true value of Bitcoin as the most decentralized and secure network bounded by energy. That is the only way to provide absolute scarcity to the world and to myself, my family, my colleagues, the society, Bitcoiners, and the world.
I love that. Thank you so much. Before I let you go, where can people find you, ask you questions, and reach out to you?
Well, thank you so much, Robin. I love your show. I'm a huge listener, so thank you so much for the proof of work. And for my part, you can find me at Alexandre Laizet, first name, last name, on Twitter and X and LinkedIn as well.
Perfect.
You can message me. I will respond. Thank you.
Perfect. I will put it as always in the description and at the guest link, your Twitter. Thank you so much for taking time. Also, thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.